All right. Hello, good morning, TC Nation. Mark Hawaiian Trader here. Hope you had a great Labor Day weekend. I'm recording this actually on Sunday night. I want to get a pre-market peek in for tomorrow morning. So if you're watching this in the morning, here's what's I'm actually recording it the night before. So the charts I'm going to show here are going to reflect that. So the reason why I want to do a pre-market peek as well is because tomorrow, if you look on your TCWorks platform right here, tomorrow is going to be not on these but on regular expirations. Tomorrow pretty much is 45 days to expiration, which is the optimal time if you're going to be selling premium, which is what we do here. So what I'm going to do is I kind of want to show you what's going on with the charts and whatnot. And as you can see, QQQ, I'll show you in this platform, Tastyworks, which is a platform I use exclusively and I love it. If you want to know how to get it, if you go to my YouTube channel here, you'll see a little link below the screen that says Get Tastyworks here. Click on that link and you get free access to the Tastyworks platform. All right, so right now I'm going through, I'll show you what I look for through pre-market stuff, but here we go. Let's see. QQQ IB ranks at 32, but this is as of close on Friday. SPY is at 12. IWM 7. No, IWM was the high flyer. QQQ is and diamonds. Here we go. 11. So of course that's why I've been focusing a lot on QQQs now, because I don't really care. I just trade what gives me the most probabilities of making money. Right now, because IB rank is the highest in QQQ out of the 4 major markets ETFs, this is what I usually focus on, and from there you can do other stuff. Now if you want to see in general, this is going to be repetitive, so I'm going to be explaining to you like maybe you've never, this is maybe your first video you've ever seen. I won't be able to do all the basic details. You have to go back maybe in some of my other older videos, but here we go. So let's see here. Let me show you the grid page. So when you get onto Tastyworks, you're gonna have this menu of columns right here. You can go to grid, and you can do, there's all these put in pre-made watch lists. So you can, they've added upcoming earnings, Tasty Trade default list, Tom's, watch list. Here's the market. Now, when you search the market like this, I always have this pointed down because I want to look at IB rank in descending order. IB rank, I look at it, okay, if you want to know what IB rank is, just look at it like as a gauge to tell whether your fruit is ripe for the picking. The higher the number, the riper the fruit is ready to be picked, or ready for the pickings, right? So as you can see here, out of all the major market indexes, these are all futures, so you won't see these numbers inside. So that's why I was showing you, the ETFs. But you can go on, for example, the Tasty Trade default list right here, and I have all these stocks, and I have it ranked in descending order by what's ripe to be picked. So inside the circles, you'll see the IB rank. You're looking for anything 50 or higher, okay? Now, I start to pay attention once it hits IB rank of 35 or higher, and I tend to start with the major ETFs of the market, which is like, for example, QQQ. See 32? They're not quite there yet, but this is what you can look at. You can even set up filters. See this little funnel right here? You can narrow it down. Narrow it down. I can say exclude earnings, which I usually do, and I want to make sure there are no earnings in the next 60 days. Okay, I want IB rank to be at least above 35, right? So you can see it's already dwindling down the choices, and I want to eliminate these. I only want 3 and 4 liquidity, and here are the 4 stocks. Disney's at 49, Facebook's at 46, Alibaba's at 46, and Cisco's at 39. That's their IB rank. Here are their pricing. Here's what they're trading for right now. Okay, and these small numbers is plus or minus if it's red or green. All right, so that's why I love this platform. It's really easy to use. The best part is trading it, using this platform to trade it. And I prefer the curve mode here, but a lot of you are familiar with this table mode. So As you can see here, this shows all the expirations. W stands for weekly. If there's nothing there that's a normal expiration, this is the one you're going to want to start off trading with. See, there's weeklies and quarterlies and whatnot. So as you can see, the expirations expiring on October 20th, 2017, they're prime ready. It's the prime time, 45 days expiration. So that's what I'm looking at. Now, what to trade and how to trade it is two different things. So I kind of went over what to trade, what I was looking for real quick, and how to trade it. I've started, this is, by the way, this is Tasty Trade. It's a free, they're the ones that started the ball rolling for this. Just go to tastytrade.com and you can watch this. In my opinion, you should have it on playing in the background with the sound on, and you'll get used to the vocabulary. Even if you don't understand what it is, just listen to it, keep it on, and sooner or later your mind just picks it up, especially as you start trading. All right. If you go to my YouTube channel, there's a whole bunch of videos you can take a look at, and I try to cover a lot, and I try to make these videos like they're always for new people who haven't seen my channel or haven't seen any of my videos. Okay. Now, all right. So by the way, here's my Thinkorswim chart setup. So here's what I used to use for day trading and whatnot. Now I want to use it just for teaching purposes. I don't use this to trade. You can do everything right here with your Tastyworks platform, right? And again, of course, just go to my YouTube. Well, in the description, in the bottom of this video, you'll see a link that says Get Tastyworks here. Click on that link, and you can go and get this software all for free. If you want a link to, if you want my chart set up, which I'll go over now, just do me a favor. Same thing, hit like, hit subscribe, and send me a message, and I will send you my charts. Okay, so this is SPY, which is S&P 500. Here's my 6-month daily chart. And as you can see, you can look at some of my last of the videos. I went over my indicators that I used to use, and I use these for when I trade too, but it's more for visual so you can get some context. So if you look, you see how my OBV cross went green right here, turned red to green, and that was 4 trading days ago, right here. All right, I'll zoom in a little bit. Okay, it went green here, right? And then it was already green here. That's a strong bullish signal for me, which means it should be the market should go up. And sure enough, one boom boom up. Okay, how high and how long will do that? I don't know. This is just my chart. If anyone tells you they know what the market's going to do, they're full of crap. Run the other direction. I have no idea what it's going to do. But this green arrow right here is when it shows my 13-day across above my 21-day. It gives me that alert, and it's a little late because I would have been long here. All right, now it goes vice versa. See, but look, good example of why no one knows. Look, it's red here, my OBV cross, and that tells me there's more sellers than buyers, so the market should go down, right? And sure enough, it did this. But over here, it wasn't red yet. My version of the slow stochastic. It went red on this day, which indicates it should go lower. It did go lower, but it kind of turned around and went green. You see what I mean? So, depending on, I mean, it kind of gives it as a guide. I don't, like I said, I use it more for illustrative purposes and teaching. But if I zoom out, you'll see long term is pretty good. Like, see, red means bearish, green means bullish, right? Especially this one. Okay? That's what tells me if there's more buyers or sellers. See, when it's red, I'll probably be short the market more because, you know what I mean? More sellers than buyers. And you can see it kind of just stayed kind of the same. It shot up here. See this? Green here. Shot up. Went green once here and then it failed. Red here. Stock is trending downwards, right? But didn't really crash. Why didn't it crash? Because this number went red. Now, if I extend this out to let's go to 1-year daily, and the market's been so strong. I'll zoom into see, even God, this market has been so strong. The best indicator would be, I guess, right here. See how it's green here, red here. It's already red here, still red, and kind of look what happened. Okay, started to come up, right? Bottomed out here. My red crossed above the yellow. right? Green, green, and look what happened. And I'll zoom out a little bit, as you can see. So anyway, that's what I'm looking at. Now, I don't look at it to make a decision to trade. I just do this honestly because most of you watching this have seen charts before, so you guys can relate. The funny thing is you don't need any of this to trade. The most important chart I use is right here though, IV rank. So you can kind of see how low or how high IV rank is over the last 52 weeks. So to make that easier to see, I'm going to click on my studies and I'm going to just load my Hawaiian Trader Chart 2 study set, and here it is. Okay, so what that did is that eliminated all the extras, and I just have IV rank. So the higher this number is, okay, the more you can get, the more money you can collect for the premium you're selling. You can charge more basically, all right, and it's right for the picking, all right. So as you can see, when you sell premium, you want to sell it when IV rank is high, because look how long it takes for IV rank to collapse. Now, if you don't understand what I'm saying, I'll try to make some more introductory videos, but when you watch Tasty Trader, you watch some of my old videos, you'll kind of get the gist of it. So basically, you want to sell high first and buy low second. Meaning, you're going to sell when IV rank is high, and then you're going to buy it when it's low. All right? So, as you can see here, a good example. Here's SPY. All right, look how, okay, nice. Okay, look. Over here, SPY got to, I mean, the IV rank in SPY got to 50. See that? Right here? I was like, geez, when was the last time it was at 50? Well, let me zoom out real quick, and you get some context. Here's the last 1 year, right? Well, look, the last time it hit 50 was all the way back here. Okay, now let's look at how long IV rank stays high. Okay, so if I go back here, you'll see IV rank stayed this high for about 1 day. Here's 50. It got to 50 here. It stayed above 50 for how long? 1 day, 2 days, 3 days. Already below it. Then 4th day. On the 5th day, IV rank dropped by half in only 5 days. All right. Sell high, buy low. All right. So let me show you what I'm talking about here. Now, of course, if you heard me and I said, well, this indicates how ripe it is for the picking and when you should start making some moves and putting on positions. Well, Mark, if you like it high up here, what are you going to do now that's down here? Well, that's SPY. Watch when I do QQQ, which is NASDAQ. All right. Check it out. Still down here, but I guess it's hot. See, here's what I mean in context. For the last 12 months, how low has IV rank, or where has IV rank averaged? All right, it's kind of been below 25, right? And if it gets above 35, which is right around here or so, right? Okay, how long does it stay there on average? Not that long. You see that? You see that? So, and it's a true 45 days expiration in the next couple days. Let me see right here. Trade. And this will show you the normal chart you guys see. Look, 46 days. So tomorrow, right? Tomorrow and Tuesday, tomorrow and Wednesday are prime time to sell premium. Okay, this expiration date right here. So now let me look at the futures because that'll show me what's going on. I'll go to /NQ. See this? And I'm going to change to my 15-minute chart. All right, so I have my 4-grid chart pattern set up here. Here's my 1-minute chart, which is this first top red grid. Click it. That's my 15-minute chart. You'll see it right here. Click it again. The bottom left is my daily chart. Okay, and I click it again. This is my weekly chart. I like to look at the weekly charts back in the day for just long-term trends. As you can see, of course, it's a freaking bull market. But over the last few weeks, more sellers than buyers, but the market's still going up. Okay. Right, back to my 15-minute chart. So here's what I'm looking at for here. All right, so I'm looking at this and I'm going, hey, oh, I'm sorry, that's my 1-minute chart. Here's my 15-minute chart. So I'm looking at here, I'm like, huh. This is the dark black is where the market closed on Friday, and this light shaded area is after market Friday, and then you're going to see a little line, like I'll zoom in right here, when the market pre-market opens, you'll start seeing more ticks over here. All right. So, and usually there's the dashed line is, you know, the day. So this is midnight. This is pre-market after. So, hold on. Yeah, see, so there's a new day. So here's after hours. Here we go. So I don't know why it looks funnier than usual. So what I'm looking at to see is if in this shaded gray area, will it break above the open market's high or below the open market's low, or if it's going to trade inside. Usually it's been trading inside so far today. So here's why I look at that. So how do I explain this? So inside, well, all right, so see how market shot up on, when was this? Tuesday, last week Tuesday. Here's how the market shot. Well, you can see right, this gray area is you know, post-market or pre-market. As you can see here, close here, drop down below. It did not, it went way below previous day's lows, right? And stayed there, and then the market just shot up. So I was like, wow, I'm surprised. This is a strong move because I would not have expected the market to go above yesterday's high, the previous day's high, which is right around here, and it did. That's a strong move right here. All right, so same thing I'm looking for here. Did it go below this low? Did not go this low right here did not go below previous day's low, which means could go higher, and sure enough it did. So here's what I'm looking at here. Could be totally wrong. I'm just trying to give you an idea what I'm looking at. So regular hours, after hours, pre-market, shot below, the market should trend down, right? And then here's, look, it couldn't go during this light gray area. See how it couldn't go above the opening high? Okay, so the market should have gone lower or stayed lower than here, and it did. See, market open, kind of trended up, but it went about halfway, which is usually what happens actually. So right around here, yep. So that's what I'm looking at. Tomorrow, I don't know what I'm looking to see. It's not going, personally, I want it to go lower, because if the market goes lower and this continues down like this, what will happen is you'll see IB rank go higher, which is what I want. See how the IB rank is pointing up higher? I want it to climb higher, because if it goes higher, I can, the IB rank's at 49. See, IB rank on the futures is 49.4, 49.5, and I want it to go higher. Because when this goes higher, so that's what I'm looking at here. And I'll go to QQQ, and I'm hoping for that to translate here. Okay, this is my 15-minute chart, as you can see here, and yeah, it looks kind of boring. As far as what I would trade, 45 days expiration, or how I should trade it, I do this. If you're just starting out, this is, I'm going to show you something I used to trade a long time ago. I do not personally trade like this, but it's called the Golden Gecko, and it is a cheat sheet, or especially if you're starting out new, it's a great way to learn. It's strategies. You're going to go to Iron Condor. Now, this is not a normal Iron Condor. It's in a traditional sense. I will show you why. Here's what you want it to say. 45 days, 84 days. You click on this 1 standard deviation. You want to be 84% out of the money, and you want to set it up roughly at 10 strikes for now. You can uncheck that. You just want the monthlies. Hit go. And here's what your screen will look like in Tastyworks. Again, if you want the free software, just click here on my YouTube channel. Okay? So what it does, and as you can see here, you want to have this toggle switch. See this button right here? Make sure it's on like that, and you'll see it change its percentages. Here's what you want. You want the bottom that you're selling to be as close to 84% as you can, because that's 1 standard deviation away from where the stock is trading, either below or above the stock price. See these vertical dash lines? See that right here? It says 1 standard deviation away. You want it lined up as close to that line as you can. Okay? And if it doesn't line up perfectly, that means there's not a option price that lands perfectly there. But there you go. That's as close as I can get in QQQ. All right? Now, see 46 days expiration. Now the top where it says buy, I want to buy closest to 2 standard deviations. which is 2% in the money. ITM stands for in the money. OTM stands for out of the money. So what usually it'll say 2%. See, 2% right around there. That's fine, 2%. But I want it close to that line right there. Whoops, funny. I think it's because it's after hours. It's giving me weird numbers. But anyway, and I'll zoom in a little bit. Ah, shucks, not too much. Okay, so what this is this is a golden gecko. It's an iron condor, but it's a specific type of iron condor, if you're familiar with the term. All it means is you're going to sell a 1 standard deviation out of the money put, and you're also going to sell a 1 standard deviation out of the money call. 45 days to expiration, okay, normal expiration, which is what's happening here, right here. You're also going to buy the 2 standard deviation out of the money call and the 2 standard deviation out of the money put. You notice I didn't say what strike price because I don't care. Whatever is close to is what I want, which is why when I talk to my private coaching clients, I'm, hey, put a trade here, put a trade here. I never have to say what strike price. I just tell them the percentages and the dates and the times or whatever, and it's really easy to find on this Tasty Works platform. Now, what's great about this is, as you can see here, this gives me a probability of making profit of 71%, but a probability of making 50% of my max profit at almost 90%. So I have a 90% chance of making 50% of your max profit. What does that mean? Well, when you sell something for $1 to someone else, let's say you go to your neighbor and you sell him something for $100. Okay, what's the most you can make? $100. That's your agreed upon sell price, right? $100. Now, but if the item you're selling them, if you want to make 50% of your max profit, you already know your max profit is $100. What is 50% of that? $50. So that's half of your max profit. So here you go. I've got a 90% chance of making 50% of my max profit. Well, what's my max profit? I can put on this trade right here and I can sell it for 81 cents a contract. It's basically one contract is 100 shares in NASDAQ QQQ. So that's 81 bucks. I have a 50% chance if I sell this to someone for let's say 80 cents, I have a 90% chance of buying it back for 40 bucks, half of this. That's crazy. It's unreal. And you'll see, here's why I want the market to tank. Well, not tank, I should say, but I do want there to be more volatility, because if this, see how as the market goes up, what's happening to IV rank? It's going down, right? But see, as the market drops this way, what's happening to IV rank? It's going higher, right? So I want it to drop, so IV rank goes higher, which means when I put on these positions, this exact same thing, 1 standard deviation out of the money, I can collect more money just for this number being higher. All right, so that's called a golden gecko. That's where I started. I don't personally trade that way. My private coaching clients, I've all taught the way I personally trade. To me, it's a lot more powerful, a lot more consistent, and you can make a lot more money. But if you're starting out, you gotta, walk before you can run. I highly recommend you learn this. Okay, and the best part is you can do it on any stock you want. Remember that list we showed you? Here it is, right here. Here's Disney. You can do the same thing on Disney. Like if I double click this, there's strategies. Look, the beauty about Tasty Works and why I love it, it'll remember. Okay, so here's what it is. Okay, now what did I say? I want this to be close to 84% as I can. It should get there, and see, as you can see, it's not as liquid, so that's as close as it's gonna get. And I can move this right around here. Yeah, but see how nothing lands in between? See, so I've got to play with it a little bit. Close, but here it is. I have a 75% chance of making a profit. I can collect it. I can sell this for $77 or 77 cents per contract. A contract is 100 shares, so 77 bucks. Click on the middle. I have a 75% chance of making money. I have an 88% chance of buying it back for 50% of max profit, which is half of this. All right, and why? IV rank is high, 49. All right, hope that helps. If you like what you see, please hit like, hit subscribe, send me a message, say hi. Feel free to go to my website. My website has a chat feature. You can chat and get questions answered real time. As far as that goes, and From in the description here in this video, you can click this link. It'll take you to my website here. It'll look like this. See the chat feature right here? Go ahead and say hi. If I try to answer as fast as I can. I might be driving or whatnot, but hey, say hi, and I'd love to chat with you. All right. Hope you had a great weekend. Let's make some money. Talk to you guys later.